With the Master Investor Show coming up on the 18th of March, this is a great time to catch up with one of the founders of the event, the entrepreneur and investor, Jim Mellon. Jim, great to see you again.
It's very nice to see you, Graham, and I'm delighted that you're going to be there and a keynote speaker. It'd be fantastic.
Yeah, absolutely. Well, let's just talk a little bit about what's been going on in the markets, Jim, because we had that long kind of bull market, and then 2022's turned into a bit of a disaster. What's your kind of macro view on where we are in 2023 and heading on into next year?
Well, there's been a very substantial uplift since the bottom in October. The S&P is up 18% from the bottom and is now only 12% away from its all-time high, which it was recorded in January of last year. But I think this is a false flag. It's a false friend. This is a dead cat bounce. And my general view is that, forgetting about the economies, which we can talk about in a second, the markets are going to have another leg downwards, and it could be more brutal than the last one. So, some of the great fund managers of the bull market that you mentioned, Graham, such as Terry Smith and Nick Train, really got it handed to them last year. That was down 30% or something like that. And I would think that a similar down leg, in other words, another 30%, is a possibility before the end of this year.
Okay, well, it's interesting because we get some mixed signals from the market. I know you've been a long time owner of and investor in commodity-based companies, and we've had, raging inflation as a result of all the money printing during the pandemic, and yet gold has been kind of trading in a range, and we've had much more focus onto nuclear power since the Russian situation, and yet, uranium's creeping up a bit. Some are calling this the start of a new commodities supercycle. What's your take on where we're at with commodities?
I would generally agree with that. I think that China is uninvestable for a lot of people for a whole load of reasons. But you can invest in things that are related to China. So as an example, the only very large capitalized company that's been going up in the last year is Louis Vuitton, and it's because of recovery in China. And the other way to play China, of course, apart from luxury goods, is without investing in China, is commodities, because China is the world's biggest user of commodities. And I would think that copper, lithium, all the commodities that we're familiar with will be going up. The gold, you're right, has been treading water in US dollar terms. But of course, if you're in any currency other than US dollars, it's done very well. So it's done well against the pound, it's done well against the Japanese yen, and it remains the prime store of value in these uncertain times. So I'm still a very big bull of gold. And if you want to play more volatility, then obviously silver is your alternative. And there are good industrial reasons for buying silver as well. It's a key metal in the green transition.
Yeah, you touched on the dollar there, and obviously it's been very strong. But I can't help feeling that Joe Biden's decision to weaponize it and the SWIFT system as a result of the Ukraine invasion could actually backfire in the long run, and that the dollar could lose its reserve status. What are your thoughts on that?
I think it will be a long time coming, but it's definitely a trend that we have to monitor. I mean, any despot or any bad person in this world will have seen that half of Russia's foreign exchange reserves were effectively confiscated, which is no bad thing. But then they would be concerned about their own reserves. And so where will those reserves go? Well, central banks are buying gold and have been aggressively buying gold over the last year. There's been an influx into jurisdictions such as Singapore and particularly Dubai in the last year. I mean, Dubai property is up nearly 100% in the last year. So, we have to look at alternatives. But, the Chinese are going to demand payment for the commodities they buy. In other words, they will want to pay in renminbi. The Chinese bond market is developing very rapidly. So I think if you wanted to diversify outside the US dollar, you should look at maybe buying Chinese government bonds, buying Chinese currency. But currencies that are very cheap against the US dollar would include the Japanese yen, which I think is significantly undervalued.
Okay. Now, when we last spoke, you just published Moore's Law, which is all about the kind of new agrarian revolution. And on the back of that, I certainly went ahead and invested into agronomics. What are the things that are currently exciting you in the agrarian sector, Jim?
Well, I think everything that's in agronomics is really exciting. I mean, this is what would be considered a sort of thematic stock, and it's had a very volatile ride. It was listed at 5, it went up to 30 something, and now it's back at 13. So it's had the traditional sort of up and down trajectory of a stock that is thematic without companies having underlying profits and earnings. However, the companies that are in the portfolio have done, mostly done incredibly well in terms of both maintaining their valuations, increasing their valuations, but also making headway towards the market. And so as an example, I talked about Louis Vuitton earlier on. Vitro Labs, which makes leather in a laboratory, is now selling to the world's largest fashion houses, albeit in small quantities, but those quantities will ramp up. And then you've got the products of precision fermentation, which are milk substitutes, yogurt substitutes, cheese substitutes, collagen substitutes, are on sale and approved already in the United States and are selling gangbusters. They can't make enough of them. And then you're beginning to see that the products that are made according to cell agriculture, which is using cells in labs to grow meat and food, are actually now getting closer to the market. So Upside Foods product was approved by the FDA with no questions. In Singapore and in Israel, you can buy chicken that's made in a laboratory. And so it's just a matter of time before this stuff gets onto the market in a big way. There's a very big contrast, however, Graham, and I'm sure I'll talk about this at the Master Investor Show, between plant-based foods, which have sort of plateaued, and I don't know if you've tried any of them, they're adequate substitutes, but they're highly processed, they're not particularly great for the environment, not particularly great for human health, and the exact replicas of food represented by cell ag and precision fermentation. They have the capacity of being much cheaper, much healthier, much better for the environment than plant-based food. So the two should not be confused in the minds of investors.
Okay. Well, you and I were both born in Scotland in the 1950s, Jim. I was 1 year ahead of you. But as I approach my 70 and 10, I find myself getting ever more interested in another of your favorite topics, and that's longevity. So tell me what's been happening at Juvenescence, and can I still plan on living to be 120?
Oh, I think you should definitely do so, and possibly beyond. So Juvenescence is a private company. It recently hired a new CEO who came from a very high positioned guy called Richard Marshall from AstraZeneca. It's going to have multiple products in the clinic, which means in clinical trials in human beings over the next year or so. And although there will be no one pill that you and I can take every day that will keep us alive to 120 and beyond, there are therapies emerging that in combination could do exactly that. And a lot of money is coming into the space, partly because rich guys like Jeff Bezos want to live for 120 or more years. And so he's put in $3 billion into a UK-based company called Altos Labs. And you've got the Saudi Arabians are putting $1 billion a year into this in a philanthropic way. So there's a lot of money coming into this space. And if I had to sort of review the landscape, I would say, notwithstanding that biotech, along with all tech companies, has done badly in the last couple of years, I think that the longevity sector is one to watch, but you've got to watch it very carefully. There are a lot of snake oil merchants out there. There is a lot of potential for disappointment. There's a lot of hype, and it should all be science-based, evidence-based, and you should have a diversified portfolio such as Juvenescence has. So I'm excited about it. I think this is a great opportunity personally, for you and me, for society, because there are more and more people like you and me who are in their 60s in this world, and less young people. And frankly speaking, the world can't afford a whole load of sick old people in their 80s, 90s, and 100s, and no young people to support them. We have to find a way of keeping older people healthy for longer so they can be productive in the workforce and not a drain on the healthcare system. This is an imperative. This isn't something that we should just think about. And I want to give you, I know I'm ranting a bit here, but I want to give you just one more fact, which is that the Japanese population by 2100 will decline from 125 million, which it is today, to 50 million. The Korean population will go down by 2/3. Similarly, in Singapore, and multiple countries in Europe will have the same. We are in a demographic crisis because the replacement of human beings by new children is just not happening. And so we're going to end up with a dependency ratio, which is absolutely crazy if we don't find ways of keeping older people healthier for longer.
Absolutely. And of course, what that means is I think there's an enormous investment opportunity there. And amid all the doom and gloom, clearly, when we look at some of these newer emerging sectors, there's plenty to get excited about. So, I mean, I'm going to be talking at the show about, how to invest in these troubled times. And I think you're going to have an interview on stage with someone. What are you planning to cover at the event, Jim?
Well, I mean, it depends on what Victor, I'm not really interviewing or not being interviewed, but Victor Hill is our best writer at Master Investor. And I thought he and I could just have a conversation about, randomly where we see things going, more or less along the lines that we've been talking. And then I will, as tradition I have, give a list of, recommended, it's not like I'm a broker or a financial advisor, but stocks that I would favor and things that I don't favor. And so I'm sure the conversation, which is 40 minutes long, will go very quickly. And I'm really looking forward to listening to your talk as well, Graham, because, you are, like all 1950s babies who've been through the mill a bit, you're a man of experience and great wisdom. And I'm really looking forward to it.
Thank you very much, Jim. I'm looking forward to catching up with you there as well. So we'll see you all at the Master Investor Show on Saturday, the 18th of March.
Thank you, Graham.